Health insurance seems to be one of the biggest concerns when people are considering early retirement, which is definitely understandable because it is very expensive in the United States. I suppose their other major concern is having enough money to retire, but today's video is the options for health insurance when you are self-employed or considering early retirement. And I will also share with you my current preference. I am Tiffany Thomas with wealthytiffany.com, and I retired from my 9-to-5 job at age 36. So if you are looking to retire early as well, hit that like button and hit the subscribe button to subscribe to my YouTube channel, and we're going to dive right in. I'm excited to share a few different options with you for health coverage if you are self-employed or an early retiree, because I know in the United States that healthcare coverage is one of the most expensive expenses that you can have. So let's get into it. The first option for healthcare coverage is actually going to the healthcare.gov website. You can choose your own insurance plan through the healthcare marketplace. They have numerous plans on there where you can just pay a premium each month and receive healthcare coverage. The better the plan, then the more expensive it's going to be, which makes sense. The nice thing about going to the marketplace is if you do have a lower income, then they offer a tax credit. So you would actually pay not quite as much for your healthcare premium if you do have that lower income. Another nice thing about the marketplace is that if you are self-employed, then the premiums that you pay are tax deductible, so you could write those off on your taxes, at least for federal income tax purposes. For me personally, when I was looking for a plan on the marketplace, I looked for a high deductible plan, which meant I would have about a $7,000 deductible for my insurance coverage. But I looked for one that was also HSA qualified, Health Savings Account qualified, which means I could set up an HSA account on my own and put money in there to pay for my medical expenses, or I could even invest my money in there. And if you are wondering more about HSA's health savings accounts, I did create a video about that recently, so I will leave a link above and below in the description, and you can check that out after this video is over. The reason I chose a high deductible plan was because I am a pretty healthy person. I rarely go to the doctor. But if you are the opposite, if you have a lot of medical expenses and you need to be going to the doctor often, you may want to choose a plan with a lower deductible so you aren't paying quite as much out of pocket for your health insurance. But I would strongly suggest if you do end up going with a high deductible plan, then choose one with that option for an HSA, because there are just so many benefits of an HSA, which you can learn about in that other video I created for you. I want to share with you a quick example of how much health insurance could cost, and I entered my own details, but you can go to the healthcare.gov website, and I will leave a link below in the description, and you can check out the prices of plans at any time. Currently it's closed, but if you do have a major change in your life, which I'll talk about later, then you could actually enroll during non-open enrollment. The details that I input were a single female who's 40 years old, lives in Utah, and doesn't smoke. And I ran a few different scenarios with different income levels. So if I was making $55,000 or more per year, then I would not receive a tax credit on my premiums like I mentioned before. My income level would be too high. So at $55,000 or more per year, I would be paying $324 per month in my healthcare premium, which would be $3,888 per year, and that would be for a $7,000 deductible with hardly anything included in the plan. I would be paying the full amount, whatever the doctor charges for a doctor's visit or any prescriptions or anything like that. I would have to pay all of that out of pocket up until $7,000. So this is a very basic plan. And I was curious, so I entered a spouse for me and put his age at 37. And if that was the case, we would be paying a total of $631 per month, which is just about double on what I would be paying for myself. And then I looked at a different income level. If I was making $50,000, I would receive a $36 tax credit, which means I would be paying $288 per month. And then I dropped the income level down to $40,000, which gave me a $118 tax credit, which means I would be paying $205 per month for my healthcare premium. And then I went even further down to $20,000. And this gave me a $372 credit, so I wouldn't be paying anything for the healthcare premium, which would be awesome. But then again, I would be only making $20,000. But I know for early retirees, we try to write off as much as possible, or maybe you're pulling money out of your Roth IRA, which wouldn't count toward your income. So there's different things that you can do to have a lower income level. And if you do have something around $20,000, then you would receive a full tax credit, which means you wouldn't be paying anything for your insurance plan. So that is the first option for healthcare, just going to the government's website and looking at the marketplace and choosing which plan you want to go with. The second option that I want to talk about is Christian healthcare ministries. And these aren't health insurance policies in the traditional sense, like we talked about before, but it's essentially pooling everyone's money, everyone that belongs to this Christian ministry healthcare plan, and then you are paying for everyone's medical expenses. And these plans are a lot less expensive than the traditional healthcare marketplace. And I pulled up their website just to give you an idea on how much it would cost. So if you had their gold program, it's $172 per month. Or if you went with their silver program, a little bit less coverage, it would be $118 per month. And then their lowest plan, the bronze program, is $78 per month. So you can see that it is a lot less, but there are some pretty strict restrictions on being able to join the Christian healthcare ministry program. They want you to be a serious Christian, basically. I will leave a link to their website below in the description, and you can click on that link to get more details about their requirements on being able to join their healthcare program. And unlike with the traditional healthcare.gov programs, you're not able to set up a health savings account with the Christian ministry programs. Just a heads up there. The third healthcare option that I want to talk about may not apply to everyone, and it may not be the best solution, but I want to talk about it nonetheless. So if you were at a 9-to-5 job and ended up quitting that to retire early, then you could sign up for what's called COBRA. And that would mean you could keep your current health insurance plan from your 9-to-5 job for 18 months, but you would have to pay the premiums on your own. So it would be a lot more expensive. And I had actually looked into doing this when I had quit my 9-to-5 job, but it was way too expensive and not worth it. So I did not end up going that route, but it is an option. And option number 4 for healthcare coverage is actually getting a part-time job. And maybe you're saying, Tiffany, I'm retired early. I don't want to be working for someone else. But I'm just saying, if you are looking for less expensive insurance, this could be a good route, especially if you find a job that you really love and you can just work there part-time and they would offer you healthcare benefits. I know a lot of banks or credit unions do this, so you don't have to be a full-time employee to still have healthcare coverage. So just think about it. You don't have to do it, but it could be an option for you. And option number 5 is actually my current preference, and this is not having a formal health insurance plan. And I know I might be crazy and you might be thinking, what? The risk is way too high. And that's totally fine. I know this option is not for everyone, and I'm not saying everyone should do it. But it's just what I've chosen to do, and I feel good about my decision, and you can leave in the comments whatever you would like about me being crazy, and if something goes wrong, I'm going to lose all my properties and all my investments, and that's totally fine. But here's a few reasons why I chose not to do a formal healthcare plan. Number 1, I am a relatively healthy person. I rarely go to the doctor, and I don't have expensive prescriptions that I need filled all of the time. I hardly ever get sick. I don't even remember the last time I got sick. And going along with this, I like to take preventative measures for my health. And I feel like sometimes people are backwards about this. They don't exercise or they don't eat right. And they just think, oh, well, I can just, get some medicine later and have a prescription filled or whatever. And I feel like we really need to take care of our bodies, because if we don't have our health, how are we going to enjoy the lives that we created? We won't really be able to do that. I enjoy going to my Zumba toning class. I enjoy going for walks outside. I eat fairly healthy, and no, I'm not perfect. I still like a sugar cookie every once in a while, but I'm not eating them every day, all day with all of my meals. And I don't smoke, I don't do drugs, I don't drink alcohol or coffee or tea. My preferred drink is water with lemon. And not only on the health side of things, I take preventative measures in what I am actually doing in my activities. So I'm not into extreme sports or skydiving or crazy things like that. So what if something does happen? What if I do need to go to the doctor? Well, since I have had a healthcare plan in the past, I've set up a health savings account, my HSA, so I can take money out of there and pay for medical expenses if I need to. Or I can pay for them out of pocket. I have some money in savings, and I also have a brokerage account that I could take from. I'm fully aware that I could have medical expenses, and I do have a budget set up for those medical expenses. And something that you may not know is that with a lot of medical companies or hospitals or doctors, they actually charge less if you do not have insurance. They tend to bill someone with insurance a higher amount because they know insurance is covering that. But if you go in saying you don't have insurance, they offer a huge discount. And honestly, I found where they do 45 to 89% discount. So you're not paying near as much for those medical expenses. Plus, everyone gets a free checkup every year with or without insurance. And if I was to sign up for insurance, I would go back to what I was doing before, the healthcare.gov marketplace, and signing up for a high deductible plan with that HSA qualification. And I would be paying over $300 a month for insurance and still paying out of pocket if I did go to the doctor or if I did need a prescription, up until I reached that $7,000 deductible. So instead, I've chosen to invest that $300 on my own and create my own insurance plan. And yes, I do realize I can't help it if a freak accident happens or I do have some sort of disease or cancer or something like that, but I've made the choice to take that risk. And I'm definitely not saying that everyone should be doing this. It's just my preference. And I said I would talk about this later in the video. If I had a major change in my life, for example, if I was to get married or if I was to have a child, then I could enroll in the healthcare.gov marketplace at any point, not just during open enrollment. Comment below and tell me which healthcare option you are going to go with once you are retired early. And if you found this video helpful, please hit that like button and share it with someone who would like to hear more about healthcare options. And also hit the subscribe button to subscribe to my YouTube channel and hit the little bell to get notified on when I post new videos. Thanks so much for watching. I'll see you in the next video.